Hey everyone, I'm outside Paddington Station in London. Hope you're all very well. And I'm here for various reasons, but one of the big ones this week was the BP meeting. And we'll talk about that. And then, of course, it's been an unprecedented environment, absolutely. And I've got to say, at times we thought, things couldn't get crazier, but they got crazier. And, that backdrop is extremely unsettling to the market, basically, because we hate uncertainty. And yesterday I met one of the biggest hedge funds in the world, and they said they'd done a trip to Washington and literally come back none the wiser. Nobody has a clue what's going on. What they're saying is that, well, at the headline level, you've got Musk, you've got Trump, you've got JD Vance. A couple of levels, one level, two levels below that, really there's no execution of what actually all of this means. And so it was very significant that another major hedge fund, this time very publicly, Steve Cohen, came out. I've seen Steve Cohen make probably 5 market calls in 25 years, and pretty much, I'm sure, the previous 4 were all bullish. I remember once actually I had by chance I happened to have dinner with him, but it's got to be 10 or 15 years ago, with an analyst I worked with who then went to work for Steve. And at the time, the market was unsettled, and Steve was very focused at dinner on what would happen in Iran. This is going back a while already. And sure enough, his view was that actually counter to everyone's expectations, the market would rip. And I've never actually been to dinner with him since, but I do remember that in the 6 months after that meeting, the market ripped. And so we see similar things as far as the market's concerned with somebody like David Tepper, Duquesne Family Office. I think these guys really are so good that you better listen to them. And of course, the bottom line with Steve is that he was extremely negative on the market, or at least he talked about a significant correction, which to us would be pretty much a more than 20% decline in the market. The market, let's say the NASDAQ peaked at over 20,000. It's now at about 19,000. It feels lower, doesn't it? I mean, it feels like it's come off more than that. But of course, it had a big rip, really, I thought a very ominous rip into the close on Friday night. And, I don't know if this is Steve's target. He doesn't have a target probably, but, the reality is that we would have to get below 18,000 before you would talk about a significant correction. In my view, it has to be probably more than 20% down move. And so, because I respect people like this, and I always say, my career wasn't built on anything I thought of. It's me listening very carefully and working out who the smartest guy and the girl guy, whoever is in the room, and then essentially listening to them extremely carefully. So the backdrop here with all this uncertainty is clearly negative. And, if you look at the reasons, they haven't actually kicked in yet. So Steve's talking about tariffs. Steve is talking about cutting the federal government, which has really boosted economic activity, not necessarily long-term economic activity, but obviously very high levels of employment by the federal government, etc. These are all things that are basically going to constrain the economy. So those 2 things alone should be extremely negative for the economy. And Wall Street is all up in excitement at the moment that the Atlanta Fed GDP Now forecasting tool, which we like, it just had one of its biggest collapses, probably the biggest collapse that it's ever had, and it's gone aggressively negative. Now people nut and bolt what makes up that measure, and whether or not it's really a proven move, a proven forecast in terms of how badly it downgraded recently. But the reality is it's looking very concerning for the market out there. I think the one thing that's propping everything up still is liquidity. And of course, you've got to worry, and I really don't know the answer to this, about where the dollar goes, because there's a lot of counter trends here. And one of the interesting things of the year to date has definitely been the ripping of the German market, of all things, the European market, emerging markets. Suddenly, the backdrop here has been an extremely highly valued market. Almost record valuation. You can certainly show by various measures that we're at record valuation. I always think that you do have to adjust for inflation, but the reality is that we're coming off in a very high environment into an atmosphere of extreme uncertainty and absolute confusion, because nobody really understands what the end game is. Trump coming in and kind of declaring trade war on Canada and Mexico was not expected, and it's just a little bit difficult to think that it's all related to fentanyl. and migration. I get it as far as Mexico is concerned, but it's a little bit difficult to construct that into a reason to have a trade war with Canada. And of course, there's been a procession. Macron, obviously, there was a lot of attention. Keir Starmer, and of course Zelensky this week, and it's all been extremely significant in an environment where what we're doing is really having a pinball market, a tape bomb market that's driven by Trump essentially setting policy by there's a nutter over there. Why does this always happen to me? Essentially setting policy by press conference, and that's just a nightmare. Imagine if you're a hedge fund manager, you can't believe how stressed these guys are as it is. They're absolutely paranoid about anything that could be happening. And a terrific example was yesterday, Friday, where you had the market was wanting to go up. It's been down almost, I think it's been down every Friday since Trump came in, pretty much. And the market, people were saying maybe it's going to finally get a positive Friday. And sure enough, the Zelensky situation caused the market to go negative from positive, but then ripped, as I mentioned, somewhat weirdly at the end of the day. So it's a very uncertain backdrop, and into that backdrop, it's probably a good hiding place to be in oils, and we think that Exxon and Chevron are in outstanding shape. Over here in Europe, they tend to favor SHEL as the company that's struggled, that's getting its act together. And I would say pretty clearly the market believes that Wael Sawan, the CEO of SHEL, is the stronger restructuring story without the need for an activist. Whereas, of course, in the case of BP, what you're looking at is a company that had made a very bad series of errors over the past, errors is to say it lightly, over the past 20 years, with the BP Texas City disaster, the Alaska oil spill, the dreadful Macondo disaster, 17 dead there, and huge write-offs, $100 billion of lost value with Macondo alone, a $17 billion write-down in 2020. At which point the strategy was changed, whereby BP said it would become a green oil company, which in itself makes no sense. You can become a greener oil company, but we always made this argument with Suncor. Presenting a tar sands company as green or ESG friendly is sort of a losing proposition if you think about the first principle, right? But what was really significant at Suncor, undoubtedly, and why this situation with BP has got really lively in the mind of the market, is that what you're looking at here is Suncor having had a huge turnaround from a dreadful position, a horrible safety record under previous CEO Mark Little. Some bunch of guys called Elliott Management came in, changed the CEO out, and the next thing you know, a year and a half later, Suncor was in great shape. And so there's tremendous optimism around Elliott Management. Now, Elliott Management are very busy with PSX. They're trying to sort that one out. Basically, the Elliott Management modus operandi is to break up inefficiently combined conglomerate companies that split apart would trade at better multiples in toto. So the big problem with oil companies, big oil companies, is that because they have refining, oil price volatility is bad enough, refining volatility is even higher. The market will attribute a low multiple to these companies, basically because of volatility with the refining. And therefore, the implied cost of capital of a company like BP is way higher than they realized when they decided it would be smart to get into renewables. And that wasn't a shareholder-friendly move. That wasn't something that particularly would appeal to US shareholders, and that's what makes the strategy change probably the worst strategy change I've seen from a major oil in the last 30 years. What compounded it, and we can kind of forgive people, everyone makes mistakes, and believe me, my clients and anyone who deals with me will know, you make mistakes over time, you try and make calls, you're going to get some wrong, and the clients are totally forgiving of that. If you explain your thesis, explain the risks, you can then just tick them off, and if things go horribly wrong, you just say, well, look, there goes my thesis. You can't have thesis drift, that's the key. In the case of BP, they had a classic case of thesis drift, because essentially when it came to Bernard Looney, they got a golden opportunity to reset the entire strategy, because Looney screwed up, quite literally in some ways, I guess, and had to be fired for personal reasons, sexual misconduct reasons, or at least misleading the board about his sexual conduct. And as a result, in around 2022-23, BP board had a golden opportunity to say, whoops, there you go, get rid of Looney and let's bring in an external CEO. Now, there's some chatter that they had approached Vicky Holland, and Vicky had wanted to merge BP with Oxy. But that's market chatter, it didn't come from me. We're not allowed to use the word rumor to give you an idea, but by all accounts, what ultimately happened was that the interim CEO, Murray Auchincloss, was given a continuation candidate job as being the CEO of BP, which is a really tough gig. But it's also very difficult for these companies to reinvent themselves internally. So that's to say, when you're within BP, you're the biggest, one of the biggest companies and biggest oil company in London, there's a natural sense of ego and self-importance that doesn't lend you to say, what we should do for this company is break it up and sell it off. And that's why you need an activist to come in and say, look, this is absolute madness in terms of what you're trying to do with EV charging mixed with refining, EV charging mixed with deep water. It makes no sense. But of course, if you make a 5-year mistake, which BP did, the first thing to do obviously is to reset it. And they did that at this meeting. There was a mea culpa. But ultimately, whatever they do is probably going to be not enough for a market that's extremely frustrated. This bloody nut is coming over. So anyway, the bottom line is that the BP meeting, Murray stood up and the big announcement was more or less predictable, the sale of Castrol, which is very sellable, which is a problem because you're selling your best assets. That's a major lube player, third biggest lube company in the world. And the sort of embarrassing thing about it all was that the major part of the strategy was to increase upstream spending to stop the declines that had been promised actually to 2030 in the original strategy. So reinvest in refining again, having not reinvested over the past 5 years, and improve the performance in downstream. And of course, you sit there as an analyst and you're like, well, if that's the strategy, what does it say for the previous strategy? And often when these companies come out and say, hey, we're going to improve our costs and we're going to get more efficient and we're not going to do dumb things like big acquisitions, you're like, what was the plan before? So anyway, BP, the stock traded off on the day, which is, a fairly immediate indicator. And the chatter, which is really through the press, Elliott management are saying nothing, but the chatter is that Elliott were watching and were not too impressed. And so what we're all now waiting for is whether or not Elliott come into BP before the proxy board nominations are due, which would be mid-March, very shortly. And that's a very tight time frame for Elliott because basically they're very busy with PSX and it's not like they have 500 people over there. They're efficient. A bit like Sankey Research, keep it really efficient, minimize staff and minimize costs. I mean, how could we not do that when we're going to stand around criticizing oil companies? And so as a result, Elliott management either is going to probably come out with something in the next 2 weeks, or maybe it will take longer, because if you look at what they did with PSX, for example, they haven't rushed that. They came in over a year ago and said, this company's not going the way we want, but we think you've got the right ideas. We're going to watch you for a year and a half. Very shortly before the BP meeting, within the last 2 weeks, they came out and said, okay, PSX, this is not good enough. We're now going to break you up, basically. We're going to separate out the midstream. And Elliott's contention basically through a major presentation. So you can see it's exciting what they could do with BP, because you get this major presentation, this major conceptual, very hard-worked presentation of what BP should do, could be in the post from Elliott, and it's going to be fascinating because the problem here is it's a little bit difficult to have a correct answer. I mean, I said, okay, look, let's have a radical idea, because nothing that BP did was radical here particularly. Radical idea is to change the name to BP America. That's obviously a little bit of an ironic joke, but you get the idea. Relocate the company to Houston headquarters, quoted in New York. You get a turn on the multiple immediately, in my view. Turn on the EBITDA multiple is $40 billion to shareholders. Just for relocating. You get out of UK, which we'll come back to. And essentially what you would then do is, one of the knottiest problems at BP is the key area where they are globally a winner, or at least a top three very obviously, is in trading. And we've been really debating that, because the question is have the traders now got the cart before the horse? Because one of the more impressive presenters at BP was the head of trading. And what she was saying is the more assets, the better. Obviously, if you're a trader, you want as much market reach as you can get, and then you essentially lever up that market knowledge into arbitrages and what they call product short markets. So, for example, they have the South African position, which looks odd on the map. Why would BP be in South Africa? Precisely because South Africa is a product short market. And therefore, if BP has excess barrels to place, they can place them in South Africa. So, of course, that's very much the cart before the horse, unless you think that the trading can make so much money that it's all worth it. But then you're turning into a Glencore or a Vitol, of which the majority are private. And in fact, I met the CEO of Vitol in Abu Dhabi, and I said to him, we're really interested in covering your stock. And he looked at me, and he's very clearly a sharp guy. He looks a bit like a British civil servant, but he looked at me, and you could see this guy's smart, and he's like, we've never been a public company, we have no public debt, and we never will be. Now, but okay, let's, anyway, nice to meet you. So, it's BP, Vitol, or Glencore. Yeah, there is one within the company, but is that the way to lead a big oil company? It's going to be a very different company if that's the route they take. The other area where we would say BP historically had leadership was in deep water exploration, notwithstanding Macondo. Certainly in exploration, they were outstanding, known for their knowledge of the subsalt, which is very tricky from a seismic point of view. Obviously, getting seismic through salt underground doesn't work, basically. So they were masters at successful exploration for many, many years. But I was absolutely stunned, not being someone who models these companies, data point by data point at all. That I was very surprised when they mentioned that they were going to start exploring again, not because they're going to start exploring again, and that's obviously going to be part of a research strategy, I guess. But the fact that they've had 50% reserves replacement for the past 2 years absolutely staggered me. I was like, what? And of course, we'll get the 10K, or in BP's case, the 20F will come out, and we'll see what the reserves replacement was this year. But 50% is a pretty staggering number for the past 2 years. And now BP's going back to exploration. But the problem here is you're putting toothpaste back in a tube. And of course, you assume that the explorationists didn't hang around pretending not to be explorationists. They probably left, right? So how do you get the best explorationists back? That's the consequences, one of the consequences of 5 years in the wrong direction, which essentially is what BP just did. So as we say, the problem here as well is that in my note, I was joking around that the BP basement meeting room was very, very cramped. And, there was they didn't have any desks, so there's nowhere for analysts to put their laptops and stuff. And what I was saying in my note wasn't that that's a big deal, because it kind of is and it kind of isn't. It's the kind of niggling detail that makes you think that they're not thinking very hard about the whole process. But the reality is, when you had been at the Exxon meeting in December with this mighty building that they've built, brand new, absolutely a cube of glass. So you can imagine, compared to a basement, Exxon's building is like flooded with excess light. Enormous desks, enormous screens, enormous war contracts for, very, very powerfully succeeding executives who want to talk about the Permian and Guyana. And what other stuff shall we do, kind of stuff. And then you sit in the BP meeting and you're like, oh my God, this is going to be tough. Now, of course, the difference is that Exxon's 2.5 times better valued than Exxon in terms of multiple, at least. And so these things are all reflected in the market. And that becomes the interest in BP, is can Elliott come in and sort this thing out? And, based on what the press is saying, they've got 5% of the company. Now, of course, that's not in the public filings, and we don't know that for sure. But there's a very good chance they come in and sort it out. Oil's holding in pretty well. I mean, look at Bitcoin, look at the risk off. Bitcoin's really proving itself to be a risk asset, which is not much use to anyone at this point. In fact, you want to short it probably. Not that I'm making any recommendation one way or the other with Bitcoin, but clearly the fact that it's sold off so aggressively here while gold is going up changes the way people might view it as a store of wealth, which is pretty much all it's got, because Bitcoin is not easily tradable. It doesn't really work that well in terms of wanting to do credit card transactions. I mean, it doesn't work at all in terms of wanting to do credit card transactions and everything else. So it's not an alternative currency in any way, actually. It's just a consensus store of wealth where everyone knows there'll only ever be 21 million of them, Bitcoin, and therefore if you put money into it and there's inflation, the price should go up. But for no other reason than there's inflation, because it doesn't have any actual functionality to speak of. It really doesn't, apart from perhaps the benefit over gold that you can carry $100 billion worth of Bitcoin in your pocket on a thumb drive, and you can't carry $1 million worth of gold in your pocket. So it does have one superior function, which would be, in my view, portability, which of course makes it, probably more attractive to criminals. Anyway, listen, I want to show you this clock. I don't think you can really see it, but we'll try and focus in on it. But that's why I'm standing here, because the clock is amazing. Either way, what you see up there, I don't know if you can, is that there's a man in that clock who's a little, real film of a man who is using an eraser to wipe out where the time is and then write another place. Can you see that? It's difficult, isn't it? Hang on. Okay, let's see if you can just, there you go. He's going to just wipe out the, I know it's difficult to see, we can find better photos, but what he does is he wipes out where the hands are, and then he writes on what the new time is, which obviously is going to be a minute later. And that gives me deep pleasure. Alex, you got to have energy, man. Everything's fine over here in London. It's pretty chilly. I'd previously tried to do this video showing you some daffodils, because spring is here in London, but the funny thing about spring in London is it lasts 8 months, and then it's time for winter. And or at least autumn, what we call autumn. Whereas in New York it's quite the opposite. In New York you go from freezing winter to boiling summer, and there's just no spring. So it's one of the interesting differences between this sceptred isle and good old New York. The real big difference being one is an island, and therefore the sea has a moderating effect on the extremes of temperature. Is that relevant to oil? Oh no, I wanted to talk about something else. The BP government. We're going to fit this in. So BP have been very associated, obviously, over the years with two things really. Iran. So they announced a big deal in Iraq, which is, is considered by clients to be a good deal. People love their Haynesville. They have a massive position in natural gas in the Haynesville. So there's some real stuff in there. This is a big company. It's a $100 billion company. As I said, the question is, can you get that multiple up? Because there's so much money on the line here in terms of their ability to get the multiple higher would be billions of dollars of incremental value. Basically, just if market perception of BP improves. So anyway, BP was obviously highly associated with the North Sea, and of course that's been just a disaster, the UK North Sea, as regards to UK government policy. They couldn't have done it worse. They've been or more guilty than BP of overcooking the environmental agenda to the detriment of the economy. That's the key point. Yeah, we always use no energy whatsoever. The world will be an environmentally more friendly place, but we're all going to be walking around naked and starving. So the bottom line is that tension is very tough, and the UK government has now succeeded in getting UK to be the lowest carbon emission per capita major economy in the world. So that's great. The problem is the economy hasn't grown for as long as I can remember, and it's absolutely not going to start growing now because there's nothing to drive growth other than tourism, pretty much. And you have absolutely almost no primary industry here apart from Formula One. There's other bits and pieces, but the bottom line is your major industries, arguably I would say that the UK should have one major coal mine operating that would feed the Drax coal plant for security of supply. It's not going to change emissions that much per capita at all. It's going to add more enormous sustainability, security to the UK electricity system if we're using our own coal. What they do right now at Drax, and I hope you realize how stupid this is they import wood pellets from the US to burn at Drax because wood pellets are renewable. And Panorama here, which is a highly respected news program, pointed out that the company that I think has pretty much gone bankrupt that was selling the wood pellets was actually using virgin wood. So what you were doing is cutting down trees in the US, transporting them using diesel across the Atlantic, getting them into the middle of the UK and then burning them in a power plant and declaring it a renewable solution. That's the kind of crap that we can't stand. And I've lost my headphone. Anyway, the bottom line is the UK government's completely screwed up the North Sea, and proof positive is, I'm gonna have to find this in fact. Proof positive is that there's record activity in the Norwegian North Sea, which, as you can imagine, does not have greatly different geology from the UK North Sea. And the Norwegians have, from a strong position of a relatively low population, abundant natural resources, almost 100% of electricity comes from hydro. I mean, Norway's, I always say that, Lula, when Brazil discovered the subsalt, said that God is a Brazilian, and I'm always like, I don't know, man, I think he's Norwegian, or she. Anyway, the bottom line is the UK government has completely screwed up the North Sea, and they've now put in a temporary windfall tax in 2022, which hammers BP's multiple, hammers Shell's multiple, hammers Harbour Energy's multiple, because now the only good reason to really own an oil stock for investors other than dividend and cash return is if oil prices go crazy and you get a windfall year. And of course, what Shell and Exxon did is made a ton of money in 2022, because that's the reality of the cycle. No government came in and gave us a windfall give back during COVID, right? If you want to take windfall taxes, then pay us at the bottom when oil prices are negative. So basically what they do, as soon as the oil price explodes to the upside, they say, okay, here comes the inheritance taxes on my mind. But a 40% inheritance tax we're paying on my mother's apartment. Unbelievable. Zero in the US, up to $13 million per parent. Anyway, the bottom line is that if BP relocated, it would get away from the whole UK government. And the one concern is, of course, the UK government will resist any change at BP, such as relocation. But I think they've lost their license completely to tell oil companies what to do, because they've screwed it up so badly. And you're basically killing the North Sea. Apache, which had dreadful results on the end of last week, have basically had to write off their entire North Sea position over the next 5 years, because the windfall tax, and this is the punchline I haven't told you, so-called windfall tax is in place till 2030. So when you talk to BP, they're like, oh, we've got a great project queue post 2030. And you're like, all right. Okay. And Alex, once again, you got to have energy. Have a great week, everyone.